Thank you for joining us at xm.com for this Forex Preview video. I'm Christina Marujas, and joining me today is investment analyst Mario Hadjikyriacos. We'll be having a look at this action-packed week in the United States. We got CPI inflation and retail sales at the end of the week. But before that, Fed Chief Jay Powell will testify before Congress later today and tomorrow. Mario, do you think Mr. Powell will repeat his stance that the Fed is happy where interest rates are, despite the fact that markets are pricing in a 1.5 rate cut by year end?
I think he will. We've heard from a couple of Fed speakers in the last few days. Their message was exactly that. We are pretty happy with where the US economy is, we are pretty happy with where interest rates are, and we expect the rates to remain on hold for the foreseeable future. That was also Powell's message at the last FOMC meeting a couple of weeks ago. So, considering that nothing much has happened since then, I don't think he will change his tone, he will deviate from that. If anything, rather, we've had a strong employment report in the meantime, so his tone could be a little more optimistic than previously. Now, if he does maintain a relatively calm and optimistic tone about the outlook, that could come as a hawkish surprise given that the markets are pricing in 1.5 rate cuts by year end, and therefore that could trigger a mild positive reaction in the dollar.
Well, before turning to the dollar, let's have a look at the data coming out. The American economy is fairly solid despite losing some steam in the last few months. What are we expecting to see in the CPI inflation report out on Thursday and retail sales on Friday?
Well, more of the same, really, that the American economy continues to perform at a relatively decent pace. So I think most of the attention will be on retail sales. We've seen consumption slow lately. That's a big concern for the Fed. So market attention will be on Friday's data. But overall, yes, we have seen a few warning signs in the US economy, so consumption has slowed. Real wage growth has also cooled. But at the same time, we've had some pretty encouraging developments. Growth is still running around 2%. The labor market is healthy. And the manufacturing sector finally stopped contracting after several months. So overall, yes, the US economy has lost steam, but it's still in a much better spot than, let's say, Europe or Japan.
And finally, turning to the dollar, do you think the dollar will continue its reign as king of the FX market?
I do. We've been saying this for many months, and I'll keep saying it. I just don't see where else investors can deploy their funds. So the US economy is much healthier than both Europe or Japan. US interest rates are also relatively higher than both of those economies. So that is creating a carry trade in favor of the dollar. Now, for this to change and for this optimistic dollar narrative to come into question, I would need to see either of two things. Either the Fed has to start cutting rates more aggressively than what is already priced into the markets, or the euro area would have to launch a fiscal stimulus package to launch growth. And according to the latest developments in German politics, that is not really looking likely. So yes, I do think that King Dollar will continue to reign over the FX market for the time being, at least.
Marius, thank you for joining me today.
Thank you.
And thank you for watching this Forex Preview here at xm.com.